Yo guys, let me know if you can hear me clearly, so we can launch it off. Let me know guys if you can hear me well, so we can proceed and kick some good asses in charting, right? Good. So let's see what we are going through. Okay, so this would be a quickie just to catch up on what's going on Bitcoin, what's going on with Bitcoin, what's going on with to check chart request from the Nest Club, and yeah, and off to my students call later. So let's get a look what's going on, right? Let's get it full mode. Let's see. Let's check actually the 4-hour chart firstly, right? So let's get rid of that. Well, actually just wipe it off for God's sake. Okay. Where we are, guys. So we are practically going by firstly going for the check for the market context where we are, right? So we had the almost 45% decline for the correction bottom that is established to be bottom so far, at least at 890.80. While at this very moment we are trading practically from this top value of 13.9 at what the current prices are around 30%. This is 29.60, something like that. So we are close to local bottoms, right? And the question is whether we want to short something that is close to local bottom. Probably answer should be no, right? And if we take the concept of evolving R, for example, by or after Tom Dante, we should be probably aware that the chances practically for winning a late short, decrease pretty much, of course, like the lower you short it, right? So practically, we don't want to find ourselves long in the top or shorting the bottom, right? So if we're having some chances to think that that we have already seen something that Bitcoin has been printing for years every single cycle, and every single cycle before reaching new all-time high, Bitcoin tends to grab the downward volatility and go for a harsh correction within a short period of time, usually to make it usually 30 to 40%, right? So this one, the 34%, can already be likely to be the bottom for the correction. Okay, so we need to consider that. I mean, there are obviously chances for filling this CME gap at 8500, right? 85 to 90 almost. While I mean, this would be perfect 40% of correction, right? So this historically, has been happening for years, cycle after cycle. So we can, if there is a chance that we have already seen the bottom here, right? So I would not be comfortable, pretty much. I would not feel comfortable shorting that. Anything that is close to that part, right? So if we are what, like a few $100, this is $700 from the bottom, then we, I would not simply short it, right? The closer we are to the bottom, that practically for the evolving R at least, we should be practically focusing on longs instead of shorts. Obviously, that would depend as well on market context, the greater market context that would be daily and mid daily, right? So if we switch it up for a second, if we switch it on to daily in 12 hours to see the local market context, so we can see that daily momentum has been practically trying to cross upwards, right? To print a bullish momentum cross, which means that that puts, you know, the likability, the probability that the correction indeed might have already ended, right? So this is something that we definitely cannot exclude, and daily momentum, high time frame momentum, is practically presenting us with somewhat of credible, or at least, you know, something to be definitely double think before we take a short entry, right? Practically for mid time frame trades, for weekly momentum, that is not looking good. Okay, that is definitely not looking good. I mean, after mid time frame, you know, trading actually for the momentum, trading oscillating in the heavily overbought zone, we have already seen, and as I said, like this 35% correction retracement that resulted, you know, obviously to be printed, resulted with printing in the heavy drop in momentum. But usually, you know, if we see the momentum stopping pretty much and presenting the bullish cross, it would be high time frame reversal and just playing only longs practically. So yeah, I mean, until we have it, we are practically officially, for high time frame perspective, in correction mode, right? So any mid time frame trade that we could be taking would be short more rather than long, and but still, I mean, this we are talking about mid time frame or high time frame even trades here taken, right, for the shorts. So the question is, again, if we dropped 35% at top at maximum, right, and now we are trading around 30% correction, so is the risk to reward ratio pretty satisfying at these very levels? And my answer would be pretty much no, right? The 12 hours mid daily is showing you know, somewhat of an uptrend, locally uptrend established, you know, holding the lows, higher lows, right? Printing the higher lows. If we have it, I don't know, just some arrow perhaps, whatever, then we can see consequently that it's been printing despite, you know, these ugly spikes, this ugly low time frame manipulation spikes. I mean, this is like an out of question, okay, the market play for dumping, you know, $500 within a minute, okay? So this is only such power, such an effect can be presented only by bigger players, by whales, to usually manipulate and trap people, right? So yeah, we are printing higher lows, okay? This is somewhat bullish itself for the price action, while the momentum is still showing, you know, the bearish like sentiment, obviously. So I would be feeling more comfortable in mid time frame longs at all. That I always, you know, just, it's like, you must remember that mid time frame longs are a bit like catching falling knives, right? Catching falling knives pretty much for the official state of correction, of retracement not having ended yet. So practically any long that we are taking, especially for mid time frame, is pretty much in danger, right? And so that's the reason practically that we should be focusing on low time frame trades if we want to long it at all, right? And short it both practically. So we are saying somewhat that may be, you know, pretty similar to, you know, to having found the bottom pretty much for the correction. But again, it doesn't mean we can exclude the option for filling the 85 gap, right, or even lower. So especially, you know, I mean, this whale play is always concerned and focused on liquidity search, right? And the only part for bigger traders, for big portfolios, for bigger position, for a trader is actually, you know, the fact to have the counterparty, the counterparty to the transaction, right? So if you go long, there needs to be somebody to short it for you, and if you don't, you know, and even if you don't want to wait for your limit order to be filled, then you go just simply market buy or market sell that, right? And then you're using the liquidity, you're paying for that, obviously, with higher transaction, sorry, not transaction, but higher fees simply for the position taking. And yeah, so we would be definitely, what we have seen so far. Like take this, I don't know, 15-minute candle that did shoot up from what, 9200, 93 perhaps. I mean, it firstly dumped, it cleared the stop losses below this low, right? Because naturally, if you go if you go long, then you set the stop loss, right? Let's say below this spinning top that is pretty much visible right here, or just go below the lowest low locally. And so it took completely took out the long stops, and later right after, it pretty much printed the candle of one of what was that? The size of the candle was like 1 in 500, right? 1,500. So it was the crazy part, and this is nothing to do. This has nothing to do with regular organic play for limit orders and so on. There was just a pure manipulation for that. And this is, I mean, every market is having market makers, right? Every market is having people or institutions that are creating that are being backed by people. People create institutions. The system of people that people build are institutions practically. So yeah, if you're having like a bigger share of the market, then you can easily trap some people, right? So just if you go here, I mean, it breaks the low, this is bearish, right? And hence naturally people like trigger shorts, trigger stop losses and so on. Hence it drops, okay? And right after you print in. You put in practically some millions per position to market buy bitcoins, and you just simply go with such a beautiful candle to wipe out completely and surprise all the market, right? Same goes for these ugly shorts. Pretty much whenever you see such a candle, it's practically this Dort Mall candle, like this how do you call that? This like a Jedi saber that is having both swords, right? This lanza, I don't know how you call that. Anyway, so here we go and see the very same part. Where is this shit? Imagine actually we can have that perhaps somehow rotated. Anyway, so you're having this candle, you're having this candle, right? You're having this candle. I mean, all of these are practically the manipulation candles, okay? And manipulation candles because of practically presenting the bigger volatility over like not much technical reason practically. I mean, market makers usually search for some technical backup to pretty much hide behind it, right? To have any reason behind it. And where is that? Sorry. Here to this very one, right? Obviously, these ones. I mean, you are seeing such this like a cyclic, manipulation pretty much for especially leverage markets is pretty much called what we call barting, right? Barting down or barting up, or chatting, like just go just step by step, gradually upward and downward. Yeah, but so this is practically the drawback for playing low time frames. Obviously, let me check if everything is okay. Yeah, good. Yo, Maxi, bro, yo. And yeah, so this is the reason to watch out with low time frames trades, right? So we are kind of fucked as retail traders, or I don't know, either you are small portfolio, medium portfolio, but you are not like a whale portfolio owning, I don't know, putting hundreds or thousands of bitcoins per position to leverage that fucking times 10 or just cross 100, right, using your left margin. Then you should be probably staying pretty much cautious on what's going on for mid time frames, and play as if you played play as if you played mid time frame trades, but watch it on low time frame in case it gets easily invalidated. So definitely it needs to use consequent stop losses. I'm not talking the very tight ones, but the mid time frame stop losses set per mid time frame, other than low time frame. Because if you got like two tight stops, it obviously gets you out of position pretty quickly on a loss, right? So nobody likes it. And what? So we have been seeing so far somewhat of an uptrend, okay? Consequent higher lows. Well, as I said, I mean, I'm not like the greatest fan of how high time frame is looking right now. I mean, the only bullish part might be after the bullish daily close, the bullish momentum flip. So if that happens and we got like printed the bullish momentum cross on 4 hours on mid time frame, then we can consider that to be somewhat of mid time frame longs, okay? But still executed on low time frames obviously, and just watched and supervised on low time frames to see and track it. So for now, any trade that we are taking is pretty much babysitting, right? This is practically not an easy peasy play for traders, because it needs, despite you're playing mid time frame, right? When you supposedly should be able to chill out and not give a fuck about low time frame swings, then here in this very case, especially on leveraged markets, just by the way, I'm curious how Arthur Haynes doing right now in the prison cell. With all the bit mixtures. It still needs the babysitting, right? So it's not comfortable. The trading is not comfortable as it was obviously before. If we got like some decent entry for around the 7,500 to trade it all down almost twice, almost 100% up, right? So it's nothing like that. So we are struggling to find the bottom, but it's still like more of in the correction mode for high time frame, while we are trading, mid time frame, we still need to watch the low time frames for that. So for that, practically, if it flips bullish on daily momentum, and if it flips bullish on 4 hours, then we can be looking for some mid time frame longs. Okay, we are still having untested this 10.4 part after the breakdown of the somewhat of this kind of shoulder structure. No matter pretty much how much whether you go tilt on the neckline, right, how much you tilt it, or just go horizontal, I mean, it practically has not 100%, but it's somewhat already filled its range. Okay, so this is another point to be discussed and remembered. So this might be a decision point, pretty much. Obviously, like it's like just as every other second on the fucking market, right? Somebody would say, but there are some parts when you retest the trend line for the fifth time, right? The same trend line still holds. Then we can consider that somewhat bullish, but again, I mean, take into consideration very often traps that occur to leveraged players. Stop hunting and just liquidity search. I mean, it's definitely not certain for the direction, obviously, as it is always. Nobody knows where it's going. You can only react to what you see, not practically what you believe in, right? Because if you trade what you believe, then you're pretty much wrecked sooner or later. And what? So we are, in my honest opinion, if we manage to close the daily, on bullish part, to stop the correction mode for recent days, after we rejected this 11.1 zone, and then we can practically expect 10.4 retest, right? We have already seen somewhat of 10.2 almost. We have made consequently higher low, but it's still taking into consideration still that mid time frame trades for weekly bearish momentum. We are still in a correction mode, right? So we cannot necessarily chill out while playing longs at any time. We need to babysit that for the reasons that I mentioned. Give me a second, guys. I'll be right back. Okay, so if we manage to close this for our bullish momentum, I could expect us to see somewhat of a retest. If we made a low on the trend line, and that is at the same time, the like mid time frame, higher low, right? But here, with this very local context, we are having low, we are having the high, that is pretty much rounded on low time frame, and we are having here higher low, here it goes. So we can expect naturally something of higher high to be established right on. And if we manage to close this for our bullish momentum, right, then we can expect somewhat of a retest for 10.4. But again, if it breaks down somewhat of the closest support is 96 practically. This is 96. We are having very unpleasant support located part. That is pretty much confluent, right? That is pretty much confluent and concise in the distance for the stop for the supports. Hence, anything below that, if you're having the support here, so people will naturally, just go slightly below with their stop losses, right? Slightly below, and this may be, again, I would not be surprised at all if we let's say go to take out these stops, right, and shoot up right after to test this 10.4. I mean, this can be the case for the liquidity hunt, as I said. But same can be for 90-80 here. I mean, it's very unpleasant and an uncomfortable spot for long traders, definitely, right? So if you haven't shorted since the very tops, then I would definitely not necessarily be 100% eager to short these levels, especially near the support, right? Because you practically don't short the support or long the resistance, right? Unless some people are skilled enough to do so. But yeah, most cases it doesn't work, obviously. But so technically for here, if it takes down this 90-80, so can be liquidity and stop hunting as well for the liquidity to long for whales, because here it would be shorts trigger the shorts per stop losses, and people would trigger the shorts, the conditional shorts. This would be another bear trap for late shorters, right? And anything that is close to 8500, where is that? Here it starts for the gap practically, and it goes down to 85 from what I can remember. So let's take it as a CME gap, right? So we are trading here close, even if it's 35% or even if it's 30, it's still closer than not to 40% of total correction that can be expected here for historical reasons. Yeah, so if anything, but it's still, if it breaks this trend line, obviously it's tilting more and leaning more towards bearish solution and practically visit the CME gap to fill. That the gaps are filled themselves very often, naturally, especially on equity markets, if you take it. Okay, let's see if we're having some questions from the exclusive members, so we can go. Here it is. Let me double check one thing as well. Or actually, just let me contact my student. Give me a second. Okay. one. So basically, guys, if it comes to alts, right? If it comes to alts quickly, that it can go for, let's see the altcoin cap. Where is it? Here it goes. Let's see the dominance as well. Despite it says altcoin cap, it's not. Where it goes? Yeah, that's the brilliant chart that I meant, guys. I mean, I would not suggest using, on dominance chart, I would not suggest using practically nothing more than trend lines. Okay, I mean, whole technical analysis is about trend lines. So I'm not feeling comfortable watching people, I don't know, using what supports and resistances that are a form of trend line as well, but in a way that they, consider supports and resistances for prices, right? That they expect investors to trade it. Why we don't trade dominance itself, right? It's a result. We don't trade dominance unless you're having exchanges specialize in that and offering some futures contracts for dominance trading, but or some indexes. But I would to the best of my knowledge, I mean at least I don't know any. But it's still, if you see some people, I don't know, drawing head and shoulders, like some patterns, Thebes, or I don't know, Ichimoku and so on. I mean, I am kind of skeptical about it, right? I mean, the technical analysis is about price. It's about price, not dominance, right? Dominance is like what? It's like a derivative for a bit for the price, right? It's not like a straight relation. It's not like a straight relation. Yeah, so where we are, it's it's slightly dropping. Okay, some people just said, I saw some people saying, I mean, stochastic and momentum and some oscillators such as, I don't know, maybe not oscillators, but moving averages, right? Moving averages are a form of a trend as well, right? The more the higher the period you take for the moving average, it becomes more of a trend, right? So and it practically shows you, or actually no, just let me yeah, I mean, it would not work for because of all that shit. Yeah, too much time. Anyway, so if you go and launch moving averages, let's say 50 or 100 or 25, whatever, or 20, then that it is a form. It is a form of a trend, right? But this is not a linear, but it is a curved trend that is practically more at times more reliable than just simple trend lines. But if you go and draw a straight line, let me just find it. Damn, dominance. Here it goes. Should see so. Hope it is like that at least. Yeah. So if you go for us trend lines, obviously, it's having some sense, right? For trend lines, I would say the only part about the dominance to actually use that as a trading edge for you would be to track it, to record that as a form of a trend. So where we are heading, and we can clearly say that we are uptrending, and this uptrend has been becoming more and more practically aggressive by the more sloppy angle, right? And yeah, so here it's weekly. I mean, some people, if you go for that on, I assume on, what was that here, right? So if you go and take it for local context, then you can pretty much say easily that the local trend has been broken, right? Has been broken. Hence, we are seeing somewhat of a capital inflow into alts from Bitcoin, and this is obviously connected strictly with the dominance chart, because the dominance chart results. I mean, it shows you the share of Bitcoin per the capitalization, per how much people value the overall market for Bitcoin, and it takes a share of Bitcoin against the altcoins, right? Because anything apart from Bitcoin is considered here to be the altcoin. So we've said 67% of, let's say, dominance is 67%. It means that for 33% or so are trading all the altcoins. So it's like 2-to-1 relation, right? It's 2-to-1 ratio. So twice as many people trade Bitcoin compared to altcoins. So that's why basically any altcoin trade is in danger as well, and cannot be mid-time frame taken easily as well, because it's easily reversible at this very stage, and it shows definitely the indecision for overall investments in altcoins, pretty much, right? Because they know they are pretty much shaky and wobbly. So if anything shitty on Bitcoin appears, let's say $1,000 or $2,000 candle up or down, right? So it would completely wipe out, increase the dominance of Bitcoin, because people would take out either the stop losses would be hit to Bitcoin to USD or whatever for the altcoins, or they would just simply withdraw their money from the altcoin market and put it into Bitcoin, because people search for volatility, because volatility brings money, and if you're having something, wondering whether to pick something that can bring you more money or lose you more money, obviously, or something that is less volatile, then you go naturally for the higher volatility if you're a retail trader, because you're naturally searching for bigger investments opportunities and bigger risk because of lower portfolios and pure greed of people. Let's see what's going on here. Damn, guys, some good stuff. Some good stuff going on, right? So this is just a short note for altcoins, and the reason I would be very cautious trade altcoins, okay? Any trade that I'm practically taking is nothing more than babysitting, pretty much, because you cannot chill out when there is such an indecision and such easily market reversing, market making. For the overall cycle, if you go and see, for example, like Wall Street cheat sheet cycle, for the psychological cycle of the market, then you are obviously, every cycle starts and ends with practically the same, right? Because it starts where it ends, practically. At the moment it starts, then is the moment that the previous cycle ends. That's what I mean. But here the lowest point is obviously depression. People are selling all of their positions because it's already dropped so much, right? So it means it would be dropping for eternity and to infinite zero, right? Well, actually, this is obviously for the wiser traders. It's like the maximum opportunity trade to be taken, and this overall market capitalization. This is not the dominance, but the summary of market capitalization for the whole Bitcoin, for the whole crypto market, excluding Bitcoin as it's here in dollars. Then again, you see the trend. And you can use the trend for dominance, because dominance is based on market cap, right? So we can use the similar relation for the trend lines, and practically nothing more, right? Despite some techniques, some concepts, trading concepts include mostly trend lines as the main source of, let's say, perspective. So we are not 100%. I am not 100% feeling good about this zone. I mean this part being empty, right? It looks as if it completely wanted to retest this trend line. So if it does, it means that like a massive number of traders would withdraw the money from altcoins, would naturally decrease demand, right, over the supply, and hence the price would drop. So if you're holding altcoins for God knows how long already, then I would be extremely cautious, guys, with that, right? I suggest personally not, and this is what I'm doing at least. I'm not taking anything more than low time frame trades of a few days, let's say, right? For now, I'm long on Ethereum and HOT only, and these are, and Euro as well, obviously, for the Burbness Bulletin July 2nd issue. That would be, by the way, followed up by the third issue already for the amazing projects that I'm extremely proud of for the fundamental team of mine in the nest. And so it looks a bit as a disbelief, right? It looks as a bit as a disbelief for the market context, and this belief is usually followed by some hopium optimism in no matter what. How you call that? No matter what order or whatever. It's all expressing pretty much the same hopium and hype building up after we pretty much see somewhat of a bullish reaction here. It can obviously just go straight up from here, right? If investors can feel safe enough, but judging by the dominance chart, I would not say so at least. So we can still see and revisit the trend line, which means that any mid-time frame trade on alt is practically not suggested, right? So practically, just putting some final notes, some final thoughts. Let's see. Let me check on my phone if we are having any question from my students, from my exclusive members to the Nest Club. Let's actually see that. Do I think it might be in play? But what might be in play? I mean, you mean the falling wedge or what exactly? Right? It's not printing the pennant, definitely, because pennants are low time frame structures. For the consolidation, for bullish, squeezing consolidation to spring up later. Here, definitely it could be the case, obviously, right? If you take it the support of a Kumo or Ichimoku cloud, it's sitting basically on a support right now. 9800 is a support, right? But for me, locally, more important and crucial support is what here is defined for this 95 to 96 practically, okay? Because this is defining pretty much the danger zone for the trend line to be broken as well. But yeah, it is possible, obviously it's possible. Give me a second, guys. So, as I'm talking to my student right now, because practically we should be having a call right now, he likes me to introduce a few ways to spot patterns. And after he's agreed pretty much to that, we can practically show it in a short way, like a short way to present a few common patterns for you guys as well to to get a glimpse for what's going on as well. Yeah, guys. Yeah, sure. Where is it? Let's launch Paint, perhaps. It would be easier. Yeah. Yeah, so when it comes to chart patterns, okay, these are all strongly connected with trend lines. Trend lines are the most important technical measures, technical phenomena, the trends that is practically being the social phenomena and psychological phenomena in people's head, right? As a crowd, this is like a crowd psychology practically, and the trend means repetitive pattern over the time presented by different sample of people practically. And if majority of people is having their sentiment over more that they are feeling it would be more growing or not. I mean, it obviously brings, the volatility and the liquidity case, and the this popular statement that you should always trade against the market sentiment practically, right? But this would be great if you are a whale, right? If you are a whale, if you can establish the trend. But if you cannot establish the trend, then you need to practically follow that to make money, right? I hope it makes sense. So we're having a bunch of patterns that are mostly to be met somehow. Let's just double check if anything new or appears. Let me just double check the message as well. Good. Where is it? The website, I'll just go right on. Here it goes. So if we, there are a few typical patterns, chart patterns, right, that you can easily spot on regular markets. I mean, on crypto, you need to filter that with knowing that we are purely manipulated for the illiquidity, for not being 100% regulated, on the contrary to, let's say, indices markets, indexes, or just forex or commodities and so on, or all the equities, right? So it makes it all this volatile, and hence this likable for us pretty much. And obviously, so you're having triangles, you're having rectangles. So let's say if we go for triangles, then you are having symmetrical triangle, you're having ascending triangle, and you're having descending triangle pretty much, right? And triangles are patterns pretty much that are happening not 100% always, depending on the market context. Like on the contrary to some pennants that you can see, I mean, just from the beginning. I mean, you can divide chart patterns into two groups. One group is the patterns of continuation or the chart reversal or the reversal, while the other are about continuation, right? So if we are seeing, so let's say here we put it as a line, whatever. Here you see the triangles, right? You are seeing the symmetrical triangle, you are having the ascending triangle and descending triangle. So symmetrical triangle does happen practically not 100% dependent on the market context. So it happens both on uptrends and downtrends. And if you go and see, let's see, high time frame, symmetrical triangle, which means that there is subsequently making, where is that? Let's put it red. Lower highs. You're putting lower highs and higher lows, right? Like usually at least 2 or 3, I mean most probably 3 touch points per each base here, touch base. Then you are forming pretty much the symmetrical triangle. The symmetrical triangle, as you can tell, is different to others because the ascending triangle is having this part flat, right? The base is flat. Same for descending triangle, and this is a different pattern to pennants. The pennants that are flags that are continuation patterns that we can just discuss in a second as well. I mean, yeah, it's getting quite already longer than I planned, but it's only because my student agreed to that to be able to share it with you all, guys. So be grateful to one of my students that he is okay with that. Here's a question: do they appear because it's natural, or because people believe that it lets say a triangle and that they trade it as a triangle, so it follows a triangle pattern in the middle of people of training out? So both of them. The answer is pretty much both of them. Okay, so the symmetrical triangle is showing some local balance practically to the market, and the balance that is getting closer and closer to get disbalanced, right? To peak either way for investors to long it or short it. And for the symmetrical triangle, I mean, you can see some statistical measures for that, but it's usually like I trusted myself personally to crypto like to be 50-50, Some people say it's like 63 to the upwards on uptrends, right? Or just 37 or just 63 to be percent of cases to be breakdown in downtrends and so on. I mean, in crypto, it's quite different, obviously, and every instrument is having the different statistics. So practically, we should be measuring own statistics for every other instrument, right? So we cannot necessarily 100% always apply 60-40 or 63-70, 63-37, whatever rules, right? Or 80-20, Pareto, whatever. We cannot necessarily 100% always use and apply the very same rules as we are using for regular markets, let's say, or just what? Some futures contracts on I don't know, on some commodities, right? So it's quite different. Every market, every instrument is having their own history practically that needs to be considered for statistical purposes. So I get that. The way I see symmetrical triangles is pretty much I see the symmetry here. Okay, I see the symmetry, and whenever the symmetry is broken upwards or downwards, where is that? Then I can simply trade it. So in case we get the bullish part, if it gets, the breakout, right? So then naturally, should retest it and just make higher high and higher low and just let it ride higher, right? And the size for that is the height, practically the height in the widest point from the symmetry size, right? So we can expect move toward practically, where is that? Move toward practically this part to be safe to trade, more or less, right? No trade is safe. That you remember that. Nothing comes without a cost as well. Yeah. So in case it breaks out, then we go simply to this, the size of a symmetrical triangle itself, right? If we go break down, then it should practically, just break it down here, make it volatility in it to activate stops and so on. Later to retest it, the breakdown, the symmetry breakdown, and to continue that in a symmetrical way, practically for the very same size, right? Yeah, so that's let's just get it longer a bit. So that's how we approach symmetrical triangles practically. That's how we approach symmetrical triangles. And yeah, I mean, I simply wait for the breakout, breakdown, and retest, right? And you wait very often for retest because it's giving you the confirmation that it's getting this direction or not the another, right? Because it can easily get trapped as well, right? Because it could be a fake out. I mean, people just long it because it breaks out. While shorters are knowing that they're having enough liquidity to short it, and hence they would just trap longs, right? The bull trap. So here it goes for symmetrical triangle. We play the breakout or the breakdown practically. And answering to your question, bro, I mean, I'm just talking on the live stream to my student. I mean, he's a badass guy. For the symmetrical triangles, practically, when you see it, when you spot it on high time frames, usually, I mean, these are taking more time and much more time to develop and to unfold than just some pennants and so on that are low time frame patterns. So I would put it as a mid time frame or high time frame pattern, right? And yeah, you play that simply the way it breaks out or breaks down. For the ascending triangle, practically, it's usually so you can put that put that practically part this symmetrical triangle, you can put that practically between, right? So if we want to what? Damn, I don't want it. This is what I want. If we put that, we can have it right here, right? We can have it in the middle practically. Let's just let's just have it here, and let's cut off this shit, not to disturb. Good. So it's kind of like a between, right? It can play both as an as a reversal pattern, as a continuation pattern. On the contrary to ascending triangles that are usually reversal patterns, and they happen very often. So let's put it as a 2. How much space I got left? Okay. 2. Damn, I wanted black. Okay. Let's see if everything's okay here. Yeah. Thank you, Tracy. Where it goes. So for the ascending triangle, it's usually, to appear after the downward, after the decline. So if you're seeing some subsequent, lows, the supports being broken pretty much, right? That establishes the downtrend pretty much, and weakness of long investors. Then we are seeing the first part that remains unbroken, right? And you're seeing somewhat of an upward rally, usually bigger than the previous weak parts that can be low time frame bearish pennants or bearish flags that we can put that in the classification of continuation patterns as well, to be discussed right after, and we establish the unbreakable, at least locally, support, right? And if we establish that, it means that the next support that would be held, it would be higher, on a higher low, right? So we are seeing practically this getting squeezed pattern of an ascending triangle that is present. Damn. Where you go? Where did you go, bro? What a guy. Can you just please write it? Here we go. Yeah, for the ascending trend, and right on like that, to we're having this flat resistance to combat right on, and again, right, if it breaks out, it's more probable, if you see an ascending triangle after a downtrend, especially after a stronger downtrend, that might be looking as if it was exhausted already, then we are having somewhat of big chances, in my honest opinion, for this to break out, right? And if it breaks out again, you get the retest, right? 1 or 2, and then just move and proceed higher. And this is a reversal pattern. The reversal pattern, at the size of the pattern is the again the widest point, right? So we can expect somewhat of this part that is very often usually of the same resistance that was that made the previous sessions before the reversal, to reject longs and drop further. And yeah, so here the breakout retest, if you go for the breakout retest, let's say here you put the long, I hope you can see that clearly. If you put the long at the first on the second retest, if it goes third retest, then you just go, you run away, you stay away from such a trade. If it goes for the third retest, you can rather expect some weakness than more than not, right? Than bullish confirmation. Then I would feel comfortable. Oh damn, what a bad looking curve. Then I would be only comfortable taking this height of a long, right? So we can go and take profit that and put a stop loss practically right below the flat part of the triangle, especially if it breaks out, right? If you go an entry here, then I would just wait for it to break out to establish this part and continue lower. Then you just simply can go and move your stop loss up, right? And if it goes more and just repeats the pattern, then you can practically move your attention towards higher part of this chart and put your stop loss higher, right, to this part. Trade the stop losses to protect your profits pretty much on longs. Let me see if my students is having question. Yeah. So these patterns obviously are, there are a lot of them. Nah, Could you tell me a bit about the correlation between the volume? Yeah, so the most important part is, the more important part is that the volume is high on uptrends and low on downtrends, right? So we cannot expect after, you know, the market bottom, let's say, for how it was on Bitcoin. Let's go for that. Let's go for daily. Let's go here, right? The bottoms are market bottoms because practically nobody's trading that, okay? There is so little interest, so, you know, little action. They're just stagnant, nothing's going on. People are getting, you know, people are printing different dunk memes on Twitter, right? Because they don't trade it anymore because there is no volatility, so they go to find for bigger volatility, let's say on Forex, on leverage, and so on. So usually market bottoms, I mean always on market bottoms, that are the market bottoms because nobody's trading that, the volume is lowest, right? So if you put a volume, if you put in a single volume, the price actions techniques pretty much focus on price candles, right? Not, or just price form, not necessarily on volume. But if you put that on a volume, and if you make it normal, not the way that I showed it, then you can see that the practically the yeah, I mean every exchange, I mean the volume is shown by the exchange pretty much, right? So while the highest volume was pretty much here, obviously for the market tops around 20k, or on major exchanges here on BitMEX it was different because BitMEX was not 100% used the way it is for, let's say, if you compare that with this 14k top, right? And yeah, so practically, and again, I'm not the biggest fan of using, you know, low time frame volumes, okay, or mid time frame even. The only volume that I would take part is practically the cumulative volume that you get over greater period of time. That would be the daily time frame, weekly, and so on, rather than hourly, right? So you can easily see some spot some divergences, which is the let's say that the price is going up but the volume is going down, right? So if that case is on higher time frame, then you can worry, right? And this is usually correlated with other oscillators printing divergences at the same time. But damn, some hurt just got into the mouth. What a day. Yeah, so practically you can practically have that, as Peter Brandt showed the other day, have that, you know, as a form of an ascending triangle. Okay, that would be the case the reason that I brought this case here as well. And usually, and you can see this volume spike. I even want to have that reversed, guys. I don't want it upward. I want it downward, right? So you see the volume spike here, and usually on the breakout on the reversal patterns that are breaking out, then you are seeing massive spike up in volume, right? Massive spike up in volume. If you compare that to previous days, it was like free as many trades per days than the previous days, right? And this was like the 1st of April fool's joke, right? So the whole rally was a full joke practically. Yeah. And volume was, as it says, volume was pretty low before it dropped from lots of people were expecting to the bottom. I would not say that most people expect free from I mean, you know, I can write a book on that, right? Because I was one of the very few people that were calling 6K not to be the bottom, on the contrary to 99% to crypto Twitter. Yeah, so it was traded indeed on low volume. It was a lot of barting up and down, like completely random for the market making plays as well. And but the main part is obviously, as I said, like you see the highest volume naturally on market tops and the lowest volume on average on market bottoms, right? That you can tell easily for this part. And yeah, but you need to, for the chart pattern to be reliable for the reversal, then you need to see the upward, the spike in volume, because the volume represents the number of trades, of active trades, pretty much, right, on a given time frame or in a given period. And you can see, if you can see the burst out pretty much of volume, then you can easily spot it and consider that to be reliable on the chart pattern breakout as well, right? I hope it corresponds somehow. So yeah, but if you see the volume dropping hard on market tops, okay, then longs are pretty fucked, and this is why they would cut they longs very often. Yeah, so I hope, let me know, bro, if that's clear already too. Where is that? Here you got the cup, here you got the one Bitcoin, right? So as much as I'm not using to my price action techniques, I'm not using pretty much volume because it does not need volume to that. The volume is obviously, on reversal patterns, it should be spotted to be increased, right? So if you are seeing like the volume profile here, if it is the market bottom, here the volume, would be pretty much low, and here you got the upward just thrust of the volume, and just continue higher for the volume as well. Good, it's clear. So this is what it goes for ascending triangle, right? And for the reversed form of it, that is the descending triangle, you are seeing that practically a mirror-like, right? So if you're seeing the market uptrending, and you can see some consequent lower highs on lower highs and practically flat lows, equal lows, then pretty much it's reversed ascending triangle and descending triangle, and you measure that exactly the very same way. You trade the breakout or breakdown or breakdown retest, and you're happy with a profit with a distance of the height in the widest spot, right, for this. So you go for this part, let's say, and you just where is that? And can you just move? Damn. Here you go. So something like that, right? And this is very often confluent for the range with previous tops. Yeah, just for the record. So this is for the triangles, right? This is for the triangles. We put a different line here. So just the question from the student. As for the triangle from 3 to 4K leg, did you trade it or just accumulate it? So what's more recommended here? So practically, as I said, you trade the breakout, right? Or just accumulate whatever is here hidden within the triangle enclosure, right? So I would be the one practically to if it was what for altcoins, right? The Bitcoin is another story because for the reasons that I predicted, like I predicted and bought it like just way lower. But I would practically, for the altcoins, for the big instability and uncertainty, I would put it for the breakout retest to play that, right? So and it is. I mean, if you go and see something that would be similar to an ascending triangle after the serious decline, then you are having some basis to claim to switch to longs if you have not done yet. So definitely not shorting, right? Definitely not shorting, at least for the evolving R concept or however you call that. It means that practically, and it doesn't want you to long the top or just short the bottom. I hope it's clear. Yeah, so let's go. So this much for triangles. Let's go for more obvious stuff. That would be, obviously, this is 4, by the way, if you ask me. If you go for head and shoulders, right? So you go the left shoulder, you get the higher high. It comes back to the very same base, which is called the neckline. It very often forms a similar height of the shoulder. and presents lower shoulder, left shoulder head and right shoulder. Here we go, like S, H, S. And again, you take the height of it. You can all close that practically in some ranges, right? If market is ranging somewhat, you can consider that part to be a ranging, and breakout or breakdown of the range, you just simply move the height of a range lower or higher, right? So again, you take from the breakdown part, you take the same height, and it again very often confluences with some similar similar parts, similar zones, support zones, or however you call that, for this part, to be practically considered to be somewhat of a support zone for this, right? Let me know if it's all clear, by the way. So yeah, this is for head and shoulders, right? It's very often the case for that to be, when it's definitely aggressively training, then it's very often for make it this way, that the neckline is tilted, right? And if it breaks, especially this part, this previous low, then you go for the very same way that you went here, right? Very often located around the previous resistance or support. So here it is for head and shoulders. You can inverse that obviously on the downtrends, right? So you're having this part, you're having left shoulder head, you're having right shoulder, again neckline, breakout that is equal for the distance for the height, right? So you see, like, obviously you see the breakout and retest, you see the volume spike on the retest as well, or just the breakout, and you go further for the height of the head, right? So if you were to present a volume profile between the volume profile below that, it would be most probably just practically flat, somewhat of spikes, just the bounces on the thrusts, up thrust, right, from after the decline, which is this part and this part, right? It would be concerned and focused about and presented with some local volume spikes. But the greatest spike should be, to be most reliable, should be practically on the right shoulder for the breakout, right? And this is something like that. Where is that? So this is inverse head and shoulders on the version that is tilted as well, like that, with the neckline being tilted in the direction of a trend that is downward, right? Here was upward, so it's usually upward oriented, and you go the height of it. So this is inverse head and shoulders. The fifth reversal pattern pretty much is reversal continuation is rectangle pattern, as Japanese people would call that, or just ranging, or consolidation, right? Consolidation or accumulation on the bottoms, and distribution on tops, that you can both use for the Wyckoff schemes for springs and so on. But yeah, pretty much often it just goes, the market finds itself to be trending in somewhat of a channel, of a horizontal channel, right, between bouncing and swinging on supports and resistances. And practically you trade it the same way as you would play symmetrical triangle, because if it breaks down, you can, if it bounces like 3 or 4 times, then it's not showing too much strength to me. I would consider that more to be weakness than strength. So I would definitely not 100% long it extremely, eagerly and certainly, but I would just wait for the breakout or breakdown, retest. You go here and you go the height of the range of the consolidation here as well, to make it a potential target upward or downward, right? I mean, it's very simple. Really, it's very simple. I mean, it's very simple because I know that, right? Because I have traded for years, so I can simply tell you that from my experience. Let me know, bro, if you're having some still questions. I'm talking to my student. So yeah, here goes for the rectangle, the consolidation, right? That is in upwards. That is considered to be distribution cycle, or like an intra-cycle or inner cycle, or accumulation on bottoms, right? I hope it's clear. And this is the very same part. This is the very same way. This is the very same way that you put that practically to be of you know, where you got that? Here we go. Where is it? Where is it? You put it in the middle practically. If there is no retest, just wait for another setup. Not really. I mean, depending, the case is not to long the top, not to short the bottom, right? So it's usually having the retest. It's usually having the retest. But if in case it's not having the retest, as if it did present here practically, well, this is pretty fucked up scenario, because like this is obviously market buying candle, right? So some whales occur to be like, you got the shaved bottom candle, which means that the minimum volume was the open price, right? And it traded only higher. So it was like a pure manipulation as well. Manipulation manipulation to be understood and understandable in the way of the market making of the market making play. And so yeah, so in this very case, let's say if you missed because if you missed out the breakout because there was no retest, okay, then you just simply go for next case, right? That you are seeing, that you are eyeing, and you know, this consolidation that you can see would be the bottoms of the range lows of the consolidation of the ranging would be practically the best entry that you can have, right? So if you missed, let's say, from the rally from 41 to 50, then you just go and retest 49 and still are extremely happy if you see what's going on right after, right? So that's what I mean. If the market is truly bullish, then it practically doesn't mean if you go and buy the retest or just go slightly higher, right? If you, where is that? Let's make it market blue. It doesn't really matter if the market is truly bullish if you go and enter here, or you just go and enter here with stop loss right below, right? So it's practically all the same. And yeah, but if you make that like 10 times in a row, right, and you're getting close to the top, then you just simply don't go for that, because the evolving or just the risk to reward ratio is completely wrong. And yeah, so let's see if we're having some questions. If possible, can you mention about retest in terms of timeframes? It depends on what time frame. The retest happens on the time frame that the pattern is occurring, pretty much, right? So if it's occurring on mid time frame or a ham time frame, especially for reversal patterns, then the retest should be of mid time frame or high time frame, not low time frame, right? So I think this is clear. If it comes for low time frames, then you just simply search for low time frames and low time frames, which is below the hour, let's say. By the way, we got the new layout for our Discord with separators. So we're trying to cover and make up for Discord limitation. Discord is pretty much not a perfect application, but not much better stuff than Discord right now on stock. What else? Yeah, so we are seeing this rectangles, we are seeing head and shoulders, we are seeing triangles. Is there what am I missing? Yeah, double tops, triple tops, and so on. So we got like a double top, obviously. Oh, let's make it blue, black. So you get very often, mark. Can you go black? Okay, you're just uptrending, and this is the first weakness that you occur to see, that the market is refusing to make higher high, right? So instead, it comes back and breaks the neckline or just the previous low. That itself is bearish. So naturally, as you go for the ranges, you just take a range of it and move down the level, right? The same level, and this is your potential target. So if you're going short, right? I mean, it should present a retest, obviously, but this is obviously already a thing. Oh yeah, wedges, obviously, yeah, well, wedges. Double tops. It goes the breakdown, it goes the retest, it drops, right? So it's worth having take profit point right above the target, right? Because if you go for the target and you put that put your take profit exactly at the support, then you're just simply putting yourself in a queue of millions of people or thousands of people waiting for the very same entry to be filled, which may mean you're not getting filled at all, right? And what? So this is is it still recording at all? Damn, I hope I didn't get disconnected, you know? Hope I didn't get disconnected, really. Yeah, so where it goes. And this is for double tops, right? It can be the very same pattern for triple tops. So I put it practically in the one form. When you see subsequent, equal highs, practically more or less, equal highs and equal lows that are being broken after the retest, so it's naturally a triple top, right? And triple top is not, I mean, double tops are much more frequently occurring than triple tops, because usually if it goes triple top, it's more head and shoulders, right? That this is somewhat of violated triple top, right? And yeah, so this is for double tops. If you go for the 7 that I'm lacking space already, can you, ouch, unless we can make that big somewhat, ouch, no, we don't want it. No, it doesn't work like that. Where I got that. Maybe the psychology part I also think kind of useful. Yeah, psychology obviously, is people, like the main idea behind the psychology is greed, right? Is the greed and fear. These are like most powerful emotions that people are, emotions or just behaviors that the people are presenting at all. And this is what also rules the market pretty much. And when they see pretty much, the average retail trader, not knowing technical analysis, that you're all having edge against already with the help of this live stream, I hope. So if people are saying, let's put it in the corner. If people are saying pretty much, something that just, where is that? That it's grown already so much, right? So it means like if you go for the first drop and you see for the first local drop or whatever, or just another correction that you think that this is a correction. So if people see that the price has already grown like what 500% or 100%, whatever, then they naturally subconsciously think that they would be continuing to grow another 100%, right? And when you have that, and especially when you're having the big positions with like tens and hundreds of bitcoins per position, then as I said, what you're looking for is liquidity. And when you know that majority of market would be longing that because they would expect it to grow for infinitely, then they would just know that there would be, for every Bitcoin out of these hundreds of thousands per position, for every Bitcoin that he would Bitcoin worth value of alt or of position, whatever, so that the bigger portfolios and bigger positions, they would know that they're having the liquidity to practically dump on all of that, right? With as low slippage as possible. And yeah, so this is practically the psychology. So if people are saying that the price has been pretty much growing so much, they subconsciously think that, okay, I mean, it's like euphoria state, right? It's like euphoria state that brings the highest volatility in the market. People consider that to be growing for like forever, and the same goes for downward, for the opposite direction. If it drops, and if it drops like for Bitcoin 85% or even 82 or whatever, then they think this shit is going to zero. No way it's going to recover. And yeah, so if big whales and big portfolios are wanting to buy, then they're knowing that people would be shorting that, especially after breaking, I don't know, some historical support, right? Because they would see 82% correction, and this shit is going to zero, no way it's going to recover, right? And then practically then you can use the fear of the people, the greed on the uptrends and fear of the downtrends, to practically long it, right? And this is very long and presents some reversal pattern on that as well very often. This is what you saw for Bitcoin as well. Where is that? Open maybe chart ahead the buy orders, perfect places, but cancel them. Oh, it's not gonna go there. Yeah, so the psychological part is obviously the persistence, and if you know technical parts, if you know fundamental parts that are more or less certain for some positions, for some trades to be taken, then you simply, after hundreds and thousands of trades that you've taken so far, then it usually comes for for the time that you know what you are doing, and for that you can trust yourself, right? The trust does not come from the very beginning. It is just something that you are building through years, through months, and through years. So trading, some majority of people is thinking pretty much that you can go learn anything, like the deepest knowledge in the fucking world. You can get, I mean, they're so greedy and so impatient that they would think that you can learn all of that in one day. Like you go and read few lines and you can fucking trade, earn 5 millions a day, and you're all good, right? Well, actually, I would be too satisfied to disappoint some of you probably, but this is not that way how it goes, right? This is years and months of practice, of persistence, of developing, of learning that you can all implement into that. And yeah, so this is the part. The uptrends is driven by greed, while the downtrends is driven by fear, and you need to counter trade that practically to after you have found somewhat of a potential, as you could see here for the very first stop and stronger response, stronger reply from the response from the bulls, compared, let's say, if you go here like a small bounce here, you got like a small bounce, but if you can see some bigger bounce appearing, right, and you see some another low being established that is higher low, then you can see and actually try to long it, right? It would be still of a catching knife mode than more than not, but yeah, this is the way. Keep going. Yeah, will. Okay, give it a second. Trading long-term position is kind of difficult. Yeah, it's not going to 10x in a day. My strategy doesn't work. Yeah, a bit, right? As I said, people are driven by greed and fear. So they come to crypto because they know that they can earn money fast, but they don't take into consideration that they can lose money fast as well, equally fast, right? So so that's it. Guys, I need 1 or 2 minute break. Give me a second. I need to make a short call. Okay, back for a quick finish on that. So last part for reversal, we are having that I'm missing the space. Let's imagine this is 7, right? Let's imagine this is 7. Moved here, just for the wedges, right? In uptrends, you can see the rising wedge. That it means that you're seeing less and less distant highs and lows, pretty much. That the whole pattern is somewhat squeezing, right? You can see that it's getting more and more weakness for the market. That is harder and harder for traders to push the price higher, right? And you enclose that practically in the form of a squeezing upward based pattern that is called rising wedge, right? And the rising wedge is it's a bearish pattern itself, obviously, if it breaks down. And if it breaks down, then it's usually the breakdown, the retest of it, and continue to drop down for the height of the wedge, right? So we can expect for the pattern to be ending the first portion of the rally here. That would be very often confluent with other supports, right? And so this is a rising wedge. While on the other hand, you're having the falling wedge. That is usually a bullish pattern. I mean, that is usually because you can always break down if something backs up, right? If some fundamental FUD kicks in, then you can simply SEC announces that they will be chasing all the crypto traders to put them into jail the next week. So there's no way people would be playing longs anyway. They would just get the fuck out of the market. And so yeah, if the market is trending down and you see bears getting less and less exhausted, more and more exhausted, and bulls getting more and more pretty much ease in stopping the downward rally, then you are seeing somewhat of inversed or reversed rising wedge. That is called the falling wedge, obviously. And the breakout, if it goes for the breakout, you go for the breakout retest, and you simply go very often for the previous resistance that is merging the height of the, and there is bringing the height of in the widest spot of the wedge. Can you just move? Yeah, something like that, right? So this is a rising and falling wedge. And for continuation patterns, apart from what I mentioned already, just a very short breakdown, really, because I need to be rushing for another call with my team. For the continuation patterns, you're seeing where's that? You're seeing the symmetrical triangle, as I said. You're seeing the rectangle triangle or consolidation, and practically you are seeing what the hell is going on? Yeah, Paint is too tricky, Paint is tricky shit. They're going on here. So for Pennants, right? For Pennants, you are seeing the bearish and bullish pennant. Obviously, these are continuation patterns. The Pennants are low time frame structures, hardly, let's say, definitely not high time frame structures. Okay, if I see mid time frame structure of a pennant, I bring in more valid to be more of a triangle. I consider that more to be triangle, symmetrical triangle or so, not really a pennant, because pennant is a squeezing consolidation, and the consolidation is pretty much resulting from the fact of people taking profit. So thanks. So for how much time can people be taking profits, right? They can be taking profits for 1 day, for let's say, I don't know, for hours. For 1 day, if it goes 24 candles, hourly candles, it's already big, right? Stuff. But I cannot really see people taking profits for months or for years or for, I don't know, weeks, right? So that's the difference. And where's that? And if you go a pattern, usually after just let's say you got an ascending triangle, market trending down, ascending triangle, right? You see the subsequent breakout. Forgive me the bad drawing. You see the breakout, retest, right? And here is the very often spot to print a pennant. And the pennant is a structure of getting closer to each other for different opposite trends, right? For the uptrend and the downtrend squeezing towards each other, which means that we are making lower highs and higher lows. And it's very often the bullish part after strong upthrust rally. It's getting short take profit part nearby strong resistances very often, because people take profit below the resistances, not on them or at them. So naturally, and for this, if it breaks out, you can always break down as well. But if it breaks out, then the height of the pennant pole, because this is a pennant, guys. The pennant is a whole structure, right? You see the pole and you see the pennant itself. So the height of the pole is practically the range of it, right? So we can expect the height of the pole is can we make it red? Yeah, the height of the pole is the zone that we can long it into, right? Where is that? So this would be the potential take profit zone for a novice story, right? So this is a bullish pennant. We can put it in the plus, and this is a bearish pennant that is happening on Bitcoin that we can see on the Barting as well part. But if the market is trending downwards, right, especially if, as I said, let's say you got the descending triangle on the top, right? You got the descending triangle, it breaks down. You see the retest and you go strong sell-off, right? Because the market got confirmed for the breakdown to be valid. And you see the strong down thrust, and you see the local somewhat of a rising wedge that is not rising wedge, but it's symmetrical, more symmetrical than not. Or I mean it might be, it's having different forms, right? It can be like a symmetrical triangle, but it's usually more for looking like a rising wedge a bit, but it's not rising wedge because it's not on top, obviously. So it's low time frame pattern for continuation, and similar way. So we go the very same distance from the pole for the breakdown to the pole, right? And move it as our potential target. So that's for the pennants. You're having a bit deformed pennants are flags, right? And when you see, this is the last part that we're going to discuss today, because I need to be really rushing. I'm saying the upthrust rally, the uptrend, right? You're seeing somewhat of a pennant, but this is not a pennant, but because it's actually moving in parallel diagonals, right? It's like a descending channel, we can call it like that. And obviously this one, if it's tilted against the trend, it's for taking profits, for the reason of people taking profit, and it's usually just a temporary part before the market strength going further. And this is a bull flag, and the bear flag would be obviously in another direction. So you go like that, you go the ascending channel for that, and you just go simply the breakdown, right? This is whole magic. This is all the magic for the patterns, right? And I'm putting that for my students, for my exclusive members here, not to be forgotten, to save it for the stream. Let's perhaps have it only a bit more like that. Here we go. Yeah, guys, so that's practically it. Just reminding you that we have launched our brand new website that you can go to check our subscriptions, obviously, that are all on 50% discount compared to previous prices. Right here, it's a new pricing model that we implemented. Here it's like 25% off from that. that it all takes it and makes it practically more than 50% off compared to old pricing. You see the Nest Club, you see the mentoring that, just one of my students allowed me to we agreed to go live with that. So thank to this guy, this is the reason that you are seeing the stream going on. Still, you can see the calls only part that you can go for what? For less than $100 probably, or just somewhere around $100. For Forex Club, that is brand new part for hours. That includes as well commodities, stocks, indexes, securities, so not only Forex as a whole. And the part that I'm wanting to share with you as well is for our cheapest products for $9.99. That is less for, I don't know, 2 coffees in 2 cups of coffees in Starbucks, right? Or just take your girlfriend to the course rather than the Starbucks coffee that is pretty much overvalued. And you go for the trading therapy that you learn from our certified PhD psychologist, trading psychologist, to control your emotions, to measure practically the level of your impatience, like badass presentations. I swear to God, I mean, the leader, I cannot really disclose the name, obviously, for obvious reasons, but I can swear that our leader for psychologist leader for that package is extremely knowledgeable and very, very pleasant to talk to. Social media pro that I would be touching people on how to grow the tweeters, for example, for how to become social media pro, right? This is obvious. And weekend charting school, all of that for $9.99 that you can learn how to chart, get all the depths of technical analysis for less than $10. Like, I mean, there's no many more offers for less than $10, I believe, on the stock. And and it's all starting tomorrow. You can easily go and just select option, and within, I don't know, the nick of a time, like a few minutes, you're just on our Discord, enjoying the brand new unique packages, because there is no other team, no other group, no other offer on the stock than ours for the trading therapy, to be able to talk to certified PhD psychologists that is actively trading, specializing in trading, to help you with trading, because it all starts with your head. So enjoy, guys. It was a pleasure. And yeah, it was a pleasure. I'm off to my call with my team to build up the Nest further. Peace out.